Hey, what's up you guys? This is Junior Trader, and in this video we are taking a look at Nvidia stock and why is $106 the game-changing level is what we'll be talking about in the context around this game-changing level that will allow us to also identify what type of potential moves we can be expecting from here on Nvidia going into this week. All right, so also you must be seeing that I have two columns. Well, at least right now these are two labels, but they will turn soon into columns as we'll talk through the things: plus points and negative points. Now the reason I have these up here, because as we'll be building the confluence in this video, it will be much more easier for me to explain you the reasoning behind these confluences based off of the weight that certain price action would hold. And every time it's, there are principles that I use that over the course of years that I have built that helps me in identifying these confluences. Now, in today's video, you will see a bit of insight into it, but there are different ways that these point systems, at least that I use, it depends based on the stock, it depends on the key levels, it also depends on the type of the pattern that's forming. But we won't go into the detail on that. That's something for maybe another video that I'll do completely separately on how to build these models. But for today, let's just take a look at for the lens of Nvidia. Now, with that, before going further, I also want to let you know none of this is any financial advice and it's only for education purposes. All right, so let's jump right into it. What has Nvidia been showing us? We'll get to the points in just a second, but what has Nvidia been showing us? Lower highs, lower lows. However, lately what we are seeing that I have been saying is a pivot at a very significant level of $97 that Nvidia is showing us, right? Now, I just want to show you weekly interval real quick as well, and then we'll soon jump into this model that we'll build. We are below 20 weeks moving average as well, all right? Now, let's get back to the daily interval and let's put few things in place and just follow along with me. By the end of this video, you will have all the clarity, all right? So what are we right now? We are below. So daily level interval will have higher weightage than the intraday levels, and weekly interval would have the highest. So for the daily interval, I'll go with the point basis system of 0.2, and weekly will go with 3, and intraday will go with 1. All right, so on the daily interval, what are we seeing? Well, we are still below 20 days moving average. We are below 50 days moving average. All right, yes, we are above 200 days moving average, but since we are dealing on the swing and the intraday levels of the plays, we are good enough with 20 and 50 because overall price action has been to the downside. Daily interval, these are more like, sorry, 200 days, they are more as for long-term type of plays, months-long plays, those type of plays, right? But we are more dealing with swing and intraday type of plays. So we are below 20 and 50 days moving average still, right? So these 2 points will go under the negative section. So let me just bring this up, and so I'm gonna give a negative point. So I'm just gonna write a 0.1 here, right? So it just makes sense, right? And then we are below, 2 points for the daily intervals, and we are below 50 days moving average. So 2 points for below 20 days, 2 points below 50 days moving average. All right. So, all right, we got these 2 points here. Now, what else are we seeing on the daily interval? We have been in the bearish structure, right? But lately, what are we seeing? We are seeing a sort of pivot form. And where is that pivot forming? At one of the significant levels, right? Now, this type of pattern of a pivot at this significant level, I like to give higher weightage. However, what am I also seeing is that, yes, we have taken out these previous pivots down here at the level of 102, but we still are below under of the previous pivot. So how I usually measure this is that definitely this will get a 2 points because it's a pivot and at a significant level. And we are also above one of the previous pivots points. So for me, it's 4. But then since we are rejecting underneath of one of the still hanging pivots in the downtrend technically, I would deduct 1 point for that. So for this, I'll be giving on the plus side 3 points for this one. All right. Now, and guys, oh, again, I know this, I'm not explaining you why I'm giving it 2, why am I giving 3, even though I'm explaining the reasoning behind it, but why they hold 2 and 3 and, wait, right? That's something I would like to do in a complete separate video. Yeah, so this is, I just want to focus on Nvidia here and just help you understand this. Now, let's go back to the weekly interval. And on the weekly interval, what are we seeing is that we are below, yes, below 20 weeks moving average. However, candle has closed strong. And you would be thinking, what about $106? Let's build the point system and then we'll get to $106, all right? What are we doing right now? We are below 20 weeks moving average, but the candle is strong, right? So for now, I would want to give this as 3 points because it's a strong candle. However, yes, it's negating, but just hear me out. And it's below 20 weeks moving average. The candle is strong, I get it, but it's below 20 weeks moving average and we'll still give it 3 negative points on both sides, all right? Now, the reason I can just not put it, but because I want to build a model here, so I want to show all the points as it is. Now, let's go to the hourly interval, right? So we already talked about pivots on the daily interval that we are forming, so I'm not going to pick up on the pivots here, but what I'm going to pick up on is the 200 hours moving average. We are below 200 hours moving average. Oops, sorry, I keep doing this all the time. We are below 200 hours moving average, and for the intraday level, I like to give it a point basis of 1. So -1 on the downside, all right? So, and yeah, I usually don't like to give the modeling point to 20 and 50 because I usually like to use them when the market is moving. Okay, so right now market is static. So in this modeling, we won't be giving points to that. So right now, what are we seeing? What's the total on the positive points? That is 6, all right? And what's total points on the negative side? So 2, sum 2, that's 4, and 4, 4, 3, 7, and 8, and that's 8. So you can see we technically in the model are still coming in the negative territory, all right? So just keep this in mind, all right? Now, why $106 is a level that I'm saying it's a game-changing level, right? So let's assume we have a green candle that gets above $106 here, all right? Well, let me actually draw it neatly here. Let's assume this is one of the candles that we have closed above 106, and let's change its color to green here. Right now, what suddenly happens, and I think I'll have to change this visibility. I don't think by default it's going to show up on the, oh yeah, it shows up on the weekly. All right, so now let's go to the weekly interval, right? Oh, yeah. So what are we seeing? We are above 20 weeks moving average, right? Above 106, we are above 20 weeks moving average, and we are already above the $97 pivot, and with a strong green previous week candle. In such type of cases, when we have a follow through of the candle and weekly interval, I'm giving the weight of 3, and we are above 20 weeks moving average, so it takes more points, all right? So 3, and that's why I want to give previous 3 point as well for the strong green candle close above 97, so that you get my point right now. Even though it got negated with the bearish point on the 3 because it was below 20 weeks, but you now get my point why I didn't just leave it out, because now it's playing a role eventually, because I'll be adding that again otherwise, right? Because it's a follow through candle, the previous one I mean. So now we are above 20 weeks moving average if we get above $106. So on the weekly interval also, we are above now 20 weeks moving average, and I give it a point of 3. I know here I'm not talking about a lot of other things as well, like there are more patterns. As I said, I'll be doing a complete separate modeling video. Yeah, and we'll go from there. But so 3 points more. Now we are sitting at on the positive side here, 9 points. You can see we are getting ahead on from the bearish side. Now we're in the positive side, bullish side suddenly, right? And so now let's go to the hourly interval. And sorry guys, there's a lot of levels showing up. Don't worry about it. But here we have a green candle. Oops, sorry. Right, and I'm not saying that's where it's just going to be this high, right? It doesn't have to be this high. But as soon as we get above this 160, even on the hourly interval, as now we also get above 200 hours moving average, right? And guys, I'm sorry, I forgot to do one thing actually as I'm talking through it. As we get above 106 and close above it, even though on the weekly, why I didn't reduce the 3 points from the bearish when we get above from the weekly as well, above the 20 weeks moving average, is for the reason that it's right now we are talking on the daily basis, not on the weekly basis. So the week hasn't closed yet, right? That's why the reason I'm not deducting those 3 points down there, because we are not assuming that the week has closed. We are just talking about Monday or Tuesday, right? Well, to begin with Monday. So let's go to the hourly interval, right? And let's say we are above 106, right? And then we get above also, eventually once we get above 106, and if we also get above this 200 hours moving average, right? Then what happens? We are now getting, oops, why do I keep clicking on different 100 places? And we are getting what on the intraday level, I like to give 1 point, right? We are getting 1 point here, right? And now, so we are sitting at what? 10. Now, what suddenly happened here also, as soon as we got above 106 and 20 hours moving average, let's check. Did we take out the previous pivot already? So what was the previous hanging pivot here? Let's go back to the daily interval. And that daily interval, this hanging pivot over here, we took this out as soon as we got above 106, which means the point system that we had over here on the bearish side that I gave just because it was sitting below that, right? So I gave a combination of, well, I already deducted that from the combination here because I gave the bullish point because we were having a strong pivot from and the $97, right? And a higher pivot, I mean, but then I negated one, even though we took out previous pivot, but I negated one due to this area. So what it allows me to do, because I deducted one because we were below another low hanging pivot in that vicinity, I gave it 3 instead of 4. But as soon as we get above 106, we are also taking out that pivot, which means we can add one more point here now. On the positive side, we add one more point and 1, and here we are 11. Now, this is now we are sitting on the bullish point at 11 and negative points at 8, provided this is just Monday and Tuesday, the week hasn't closed yet, right? Now, so we are already bullish. That's why $106 is such an important game-changing level, because this definitely defines a change in the momentum. Now, if we want to, and again, we are not fully out of the woods yet though. We have to first get above 106, right? But also, if we can close this week above 106, 20 weeks moving average and all of that, what you suddenly can do is remove 3 points from the negative side at the end of the week, and we come down here to 5, right? So you see the difference suddenly, right? How ahead we are getting on the bullish side. Now, if you go back to the starting of the video, if we remain below 106, we are ahead on the negative points. I may have lost the track of numbers now. I can't go guys back because right now because I have already made the way through the calculations. But just rewind the video. When we started and we are below $106 level, all the points calculations, we were 6 points bullish and 8 points bearish. So if we stay below 106, bears are still technically ahead for the next play, right? But it all comes down to $106. So this is the model, guys. It's very high level. I just want to go over this, the point space system that I do. Again, as I said, the more detail why these pivot points has these points. Why do I give these weightage to the negation of if we haven't taken out a previous hanging point? They are double bottoms patterns. They are inverted head and shoulder patterns. They have a different weightage in my model. But all those modeling things, I would like to do a complete separate video. But please show me a lot of love on this video by liking and subscribing so that I know you are interested in this stuff. And yeah, so that's what all it comes down to, $106. I wanted to show you using a proper confluence here, and that's why I wanted to do this modeling with you in this video. Now, yeah, so let's leave it there right now. I'm going to remove it once the video is completed. So here's the thing. Though, even if we don't get above 106, this is the level though. If we lose 102 and 57 cents, that's a problem. We may continue lower then. 106 and above, and also above 200 hours moving average, and all of that, we have to close price action. Again, it's not that it just goes up and then falls off the same day. We have to see a strong price action on the lower time frame as well to give us those complete, bounces and pops, right? Like taking out these areas of 106, especially. You are seeing that the supply coming in at this area of 106, getting above these levels is important. And especially as I showed you on the hourly interval, that we need to get above 106 and also 200 hours moving average. Then only this model is getting bigger and bigger, right? But and then yes, but yeah, 200 hours moving average in itself would be quite a big win, right? And then below 102 is definitely a problem that is, can lead to more downside. This model will be favoring the bears, right? You can rewind the video. And then, I haven't built the I'm not gonna, I don't think I have enough time in this video, but if we break $102 level, model will look different. And there are other things that will be taking into that account, but I'll want to do that again, in a different video, because $106 is what I want to talk about as a important game-changing level, because that's where some more upside would come. If we stay below that, then breaking below 102, I have done that model for myself on my, my papers on the side that right now I don't think I have time to go over in this video. Otherwise, this video is going to get too long. But just keep in mind, if we lose 102 below, the bearish model is quite big. I mean, it's quite strong, at least for intraday, and then we'll eventually see how the week closes and model accordingly. There's an intraday model, there's a weekly model, and accordingly, and that's what I took you through in the transition phases, right? So I explained once the week closes like that, right, how that model would change, right? How many points would be added, how many points can be removed from the other side, and that affects the model. So anyways, and then, yeah, if we get above 106, don't forget we still have 20 days moving average coming. All right. So but that could be the target, right? Now, that's the thing. That's why 106 is such a game-changing level here for me, is because it is changing the weightage from the bearish into the bullish territory for a strong hold. But we need to see those, as I said, it just shouldn't be a fake out, right? We need to see a strong close above that as well. But that would be that. But these models are always evolving day by day as these price action would evolve. In this video, I just provided you very high level of these models. Again, like I have very in-depth technical analysis model that I have been using for many years now, decades almost. And but that's something, as I said, I'll be putting a plan together how I would like to be sharing those models with you. All right, guys. Now, anything else is there anything else left here in this video for me to talk about? Well, for the upside targets, I'll talk about in the options video as well coming out this weekend. If we get above 106 and 200 hours moving average, eventually that 20 days moving average that is coming down on the daily, just keep that as one of the targets. And though if we get above that as well, then 118 is the upside target. And if we lose 102, then 97 is the again thing. And if we lose 97, then $90 is the again the thing. But yeah, level by level, right? So yeah, and then if you lose, 90, if you lose that, then 200 days moving average is the only last for the bulls, the savior potentially. But anyways, $106, this is why it's such a game-changing level, because it is shifting the momentum from the high weightage that still, in my opinion, the sort of bears are holding on the overall structure. But we are just at that precipitous point that if we can do it, we can pull through it, the model will shift more towards the strong bull side. All right, guys. Thanks for sticking around till the very end. And if you did so, please hit the like, subscribe, share this video with your friends, family, your colleagues, whomever you would like to. I highly appreciate that. I appreciate your support as well. And I'll see you in my next videos then. Take care. Bye.